Good morning. This is an extension of the previous lesson, still entries that is recorded in the general journal. Withdrawal of goods by the owner. Up to this point, we have only dealt with when the owner took money for himself for personal use, which was then recorded in the cash payment journal because it's money that the owner took. The drawings account will be debited and bank will be credited when the owner takes cash. Now, the drawings account is also debited when the owner takes any other asset or possession of the business for private use. So, in essence, when the owner takes anything, doesn't matter what he takes, drawings will be debited. Now, let's go through a summary of various business transactions that involve the owner. We will look at the type of transaction, in which journal it will be recorded, which account needs to be debited, which account needs to be credited, and the effect on the accounting equation. The first transaction, owner drew a check for own use. What does that mean? It means the owner is taking cash. This means it's recorded in the CPJ because money goes out of the bank account of the business. Whenever the owner takes something, drawings will be debited. What did he take? Money from the bank account, so bank will be credited. Now, bank is an asset, and since the money is out of the bank account, my assets will decrease. Drawings decreases owner's equity, and it will have no effect on the liabilities. Next. The owner paid private expenses with a business check. Again, it's a check, which means it is in the cash payment journal. Again, the owner took, so drawings will be debited. Again, what did he take? He paid for private expenses. So again, the money goes out of the bank account, so bank will be credited. Again, my asset decreased because the money in the bank decreased and owner's equity decreased. No effect on liabilities. The owner took goods at cost price for own use. Now, please note, the owner always takes goods at cost price. Now, this is not money. It doesn't involve the cash journals. He took goods, so this one will be recorded in the general journal. Again, he take, so drawings will be debited. What did he take? Goods. What is goods in the books of the business? Trading stock. So that means trading stock needs to be credited. Now, trading stock is an asset and has a debit balance. If we credit it, it means my asset decreases. Again, drawings decrease owner's equity, no effect on the liabilities. The owner took equipment for own use. Again, it will be recorded in the general journal. Again, since the owner took, drawings will be debited. What did he take? Equipment. So equipment will be credited. Again, equipment is an asset with a debit balance. If we credit it, it means our asset decreases. Drawings decrease owner's equity. No effect on the liability. Say the owner took stationery for his own use. Again, it will be recorded in the general journal. Again, the owner took, so drawings will be debited. What did he take? Stationery. So stationery will be credited. Now, drawings decreases owner's equity. So that means owner's equity will decrease, but stationery is an expense that now decreases because we credit it. And since expense decreases, it means owner's equity also increases. No effect on assets and no effect on the liabilities. The owner donated goods from the trading stock. This will also be recorded in the general journal. Now, here the owner did not take. He donated. And donation is an expense, so that will be debited. And what did he donate? goods, so trading stock will be credited. Again, trading stock is an asset that is credited, which means an asset decrease. Donations is an expense, and therefore owner's equity will also decrease. No effect on the liabilities. The owner donated stationery in his personal capacity. That means he did not donate it on behalf of the business, but in his own capacity. And whenever something is in his own capacity, it is drawings. Again, it will be recorded in the general journal. Since he did it in his personal capacity, drawings will be debited. What did he donate? Stationery. So stationery will be credited. Drawings decreases owner's equity. Stationery is an expense, but the expense stationery decreases. So once more, there's no effect on the assets, and owner's equity will decrease with drawings and increase because our expense stationery decreases, and no effect on liabilities. The owner returned goods previously taken for own use. Again, this will be recorded in the general journal. Now he returned the goods, which means we need to do the opposite that what we did originally. What did we did originally? We debited drawings and we credited trading stock. Since he's returning it, we need to do the opposite, which means we will now debit trading stock. The stock is back into the business, and we will credit drawings, which means our asset will increase and owner's equity will also increase. No effect on liabilities. The business bought goods on credit on behalf of the owner. Okay, now whenever we buy on credit, it is recorded in the CJ. But it's bought on behalf of the owner, and therefore drawings is going to be debited and creditor's control is going to be credited. None of those are assets, so there's no effect on the assets. Drawings decreases owner's equity, and our creditor's control, which means my liability will increase. The owner gave a personal vehicle to the business. Now, what did we say? Whenever the owner take, drawings will be debited. But whenever the owner gives, capital will be credited. Up to this point, we have only dealt when the business contributed money as capital, but he can contribute other stuff as capital too. So this will be recorded in the general journal. What did he give to the business? A vehicle. So vehicle will be debited, and since he gave to the business, capital will be credited. So capital do not only consist of cash, but it can be anything else that the owner gives to the business. Vehicles is an asset that is debited, so my asset increase, capital increases on its equity, and it has no effect on liabilities. Let's look at an example of what when the owner takes goods. There are three. We will deal with them individually. So the entries in the general journal will be, number one, the owner took goods at cost price for own use, 550. Whenever the owner takes, drawings is debited. And what did he take? Goods. That means trading stock needs to be credited. And my narration, owner took goods at cost price for own use. Remember the account that we debit first and the account that we credit second. Let's look at the second transaction. The owner donated stationery to the local primary school on behalf of the business. So it is an expense to the business, which means donations will be debited. What did we donate? Stationery. Stationery will be credited. Owner donated stationery on behalf of business. The third one, the owner gave his personal computer for use to the office of the business, 12,000. So in this case, the owner gave. That means capital needs to be credited. So what account do we debit? What did he give? A personal computer. What is a computer considered to be? It is trade equipment. So equipment will be debited with 12,000 and capital will be credited 12,000. Owner gave equipment. What will be the effect on the accounting equation? First, the owner took goods. So that means my trading stock decreases, therefore my asset decreases, drawings decrease, owner's equity. The next one is donation of trading stock. I mean stationery. Donation is an expense, so it makes owner's equity decrease. But our stationery decreases. Our expense decreases, therefore owner's equity will also increase. The last one, the owner gave equipment. Equipment is an asset, so our asset increases because our equipment increased, and capital increase, owner's equity.